Ladies and gentlemen, welcome to another episode of Echale Podcast. My name is Jose Quintero, and we have with us
Eddie the Hustler.
Eddie the Hustler. All right, we're going to continue with these master classes of finance. And in today's episode, we're going to go ahead and talk about stocks, the stock market, dividends, all these terminologies that you're probably hearing around that were already around, but during the pandemic, everybody started getting into them. Really, right?
It was crazy. I don't think I've ever seen so many people get interested in like the stock market during COVID.
Yeah.
It was crazy.
I'm not even going to lie. I was one of them. I was definitely one of them. Like I started investing 2019. I bought my first stock and it was, well, not even stock. It was crypto. I was starting to hear about crypto and it was December 28th. I still remember it because that's the day I opened up my brokerage account with Robinhood. And I started like dwelling into it. And obviously the pandemic started and boom.
Yeah, everything was going crazy.
I literally felt like, man, I already knew about this shit.
It's that confidence because like there was so much money getting put into the market, stimulus checks, all that stuff. Like I know for me, the good thing is that I was blessed to live with my parents and not have really any expenses. So I was throwing everything in the market, every check.
But you also understood what investing was. I didn't. So like, can you imagine me? I was like going through the ups and downs of trying to be a day trader, trying to make some quick cash, so you at least had, I don't know, when did...
I started in like 2017, the end of 2017. So 2018 is like
so you had about 2 years.
Like 2 years.
2 years. I have 3 years already invested or about to hit 4 years. So you were already like, all right, you already went through the ups and downs, losing money. So you were a lot more strategic. I was going with what the news was saying.
Yeah.
Well, and they always say, buy the fear, sell the... What is it?
So... what's the
buy the fear, sell the hype?
I don't know why I'm getting stuck.
Oh, you're getting
You cut me off guard. I know what it is. I'm like brain dead right now.
Let me see what they say. Everybody's probably at home. Pendejo.
I know. It's like
buy the fear.
I think it's like sell the news.
No. Oh, buy the fear, sell the news, sell the greed.
Yeah, there we go. Yeah.
I mean, that's what's popping up. Buy the fear, sell the greed.
I know Warren Buffett, he says buy
on fear.
Buy when people are fearful and sell when others are greedy.
Yes. Okay, there you go. I like that.
Is it that one? Yeah.
Oh, no, I mean, it sounds dope, but it makes sense. But no, I mean, a quick example would be like Bitcoin. Everybody and their mom was talking about Bitcoin and oh my God, what is the other one?
Bitcoin, Ethereum.
There you go.
Yeah.
Well, those are the big two.
Big ones, yeah.
Yeah, but everybody's like, oh my God, like it's going up. So as it's going up, you see people put money into the cryptocurrency, and then what happens? Because people are buying the hype and buying the news.
Yeah.
The people who were smart enough and invested when nobody else was doing it, they were like, psh, I'm going to take my money, and then it started crashing. And then my dumbass, me being one of them, where I bought Ethereum at like 3,500. Yeah. And I was like, hell yeah. It's going to go to 10 grand. Like people have...
To the moon.
Yeah, to the moon. People were literally saying it's going to go to 10 grand. And all of a sudden, it went down to 1,900 and I couldn't.
Yeah, that's how you learn though, bro. Sometimes you need to get your hand burned or like get burnt a little bit in order to like, ooh, shoot. But that sparks the curiosity, like, dang, how can I prevent that? What do I need to do now?
Yeah, so people listening, yes, I did lose about 2 grand in the stock market, and you're just like, fuck, that is a lot. Yes, it's a lot of money. And I learned I can't do cryptocurrency because of the volatility. Yeah. What does volatility mean?
Basically, volatility is the price going up and down, right? It moves a lot.
Constantly.
Yeah, bro. Like a roller coaster, right? It goes up and then comes down. And you're like, oh, shit, what the hell?
So it's definitely anxiety. Before we go ahead and get started on this episode and talk about more stocks, talk about everything, like actually how to make money and whatnot. One thing in the last episodes that we did not mention, if you didn't listen to the very first episode of The Psychology of Money, make sure to listen up to the episode. I'll have the link in the description below. But we talked about cutting the things like Starbucks and hot Cheetos and whatnot, but we didn't really explain real quick, like, it's not really necessary.
Yeah, I think, it's important. Like if you like Starbucks, right, you like to have a cup of coffee in the morning all the time, right? you don't need to necessarily cut that out and that's going to make you rich. Now, I think what you need to cut out is the things that you don't necessarily need. For example, like a gym membership. If you're not going to the gym consistently, I mean, that's something that you could avoid, right? Save that extra money, but cut the things that you don't love or need and use that money to either save, invest, pay down debt, whatever you need to do. So you could still have your cup of coffee in the morning or whatever you want, you know?
I mean, dude, I had Uber Eats. Uber membership.
Yeah.
I was like, well, I don't need the membership.
Yeah.
And then I had a couple streaming services that I'm like, well, I don't consume as much content from that streaming service.
Yeah.
So I'm going to cut it out. And it's things that I didn't really use that I was already paying for. So yes, go ahead and spend your money on Starbucks, spend your money on Hachita, spend your money on things that bring you joy, because at the end of the day, joy, like nobody's going to take that away from you. And it's so self-satisfactory that,
Yeah. You know, it's those little things that help you keep going and stuff. But yeah, I think, you know, just write down where your money's going, pay attention to it. And then from there, you know, as you get more experience and you start getting your feet wet, you'll start realizing how you can use your money or where you could put it and things like that. And just go from there.
All right, so now let's get into an overview of the stock market. Remember, this is just a generic overview. If you have any questions, feel free to DM us at Jose Quintero TV or at
Eddie the Hustler.
Yeah, because this is a general overview, masterclasses. We want to spark interest. We want you to echarle ganas and also do your own research. Because at the end of the day, it's personal finance.
Yeah.
Stocks.
Emphasis on personal.
Personal. All right. So stocks, what is a stock?
Yeah. So a stock is basically a share of a business, right? So companies typically issue stocks in order to like raise capital or to raise money. That way they can invest it to grow the company. But pretty much a stock is ownership in an actual, business. It's also called paper asset, right? But that's pretty much what a stock is.
It's so funny that I knew what a stock was in Spanish without knowing what a stock was. Yeah. Because I would always, obviously, everybody knows I was a novelero, and I'm still like into series. That's what they're called now on Netflix, not right? Yeah. Not novelas. Pero in Spanish, I would be like, ¿Cuántas acciones tienes?
Yeah.
Like, oye, voy a vender mis acciones. It would be super dramatic. Oye, no, tus acciones me pertenecen. So it's sort of like, they're literally in the novela. They're talking about the building that they're in, the company that they're in. An acción is like if I have 51% of the stocks and I own them of that company, that means I make the biggest decision even out of the 49, like I have the final say.
Yeah, and the cool thing about like having stocks is,
it's never going to happen with these bigger companies, FYI.
Yeah, but it's like, so a company issues stocks, right? It's basically like a pie, and one individual slice is a stock, which is what you own. And now you become part of, the voting, if there's anything that they need to vote on, all the profits that the company gains, right? Dividends, if they pay that as cash payment. But all that good stuff that happens with that business, you are now entitled to it simply by owning the stock.
What are some stocks out there right now?
So there's a lot of stocks. I think for me, one of the best ones that I liked and that I got started with is VOO. That's basically an index fund, exchange traded fund, ETF actually.
Oh, we'll get into that.
Yeah. So,
but like actual companies where people can be like, okay, I'm going to go ahead and start here.
I think when it comes to like, okay, what company should I invest in? Like if I wanted to, is look at where you're spending your money, right? Like I got Jordans on, Nike.
Wait, I was like,
iPhone, invest in Apple, right? So like little things like that in order, if you're like, dang, I don't know what to invest in. Look at where your money's going right now, right? I'm not saying invest a whole bunch, but maybe just look at how much is one share, how much is one stock, how much does that cost? And then as you get your feet wet, curiosity is obviously going to start sparking. Like, why is it going up? Why is it going down?
So then you start researching and then you start reading and then you start seeing that like not just the company moves that they're making are impacting the stock, but also external factors like the economy.
Yeah.
Like
and during COVID, like I think that's a good example, right? When COVID hit, everything was shutting down. Obviously, the market tanked. It went down like crazy. But
Why?
because a lot of these companies, one, there was a lot of fear. So in the short term, the market is going to move based on people's emotions. So if everyone's scared, like, oh, the world's going to end, obviously people are going to sell their stocks because I'd rather have that cash because I don't know what's going to go on. I don't know, zombie apocalypse, I need my money, But over the long run, it's going to be based on the economics of the business, right? How well it's doing. And I think a good analogy or perspective is like, if you look at Target, if you look at Starbucks, right? During COVID, their stock went down, but they were still open and you guys saw the line. So they're still making money. So if you would have bought during that time, now it's up.
Yeah. All these stores went tanked. All these companies like Apple, Tesla, they all went down for the same reason. People wanted money right then, just in case of an emergency. And what did we see after the pandemic? Or during the pandemic, like the recovery aspect of it, they started going up because they were still functioning. And that's when people made so much money. Like so many millionaires were made during a recession.
Yeah, exactly. Yeah. So going back to like Warren Buffett's quote, right? You want to buy when people are fearful, right? When they're scared and stuff, that's when you want to go and invest your money. That's the best opportunity. And, it's hard to kind of have the emotional intelligence and like the ganas to do it because everyone's panicking. So sometimes you're like, oh, shoot, what the heck, right?
Yeah.
But it's a muscle that you need to train, and as you start getting more familiar with it, you'll be more comfortable. The fear is never gonna go away because even when I see a drop, I guess I'm like, oh shoot.
Yeah, and you'd be surprised, stocks out there that you can actually buy, and you're like, well, hey, I like cheese. Well, Kraft.
Yeah.
Kraft. You like
Ketchup,
soda?
mustard.
Yeah, you like soda. You like Dasani water. Well, okay.
You like hot Cheetos, Pepsi.
Pepsi, there you go. And so, see, you just have to see like who owns this.
Yeah.
You brush your teeth every day. What's your favorite toothpaste? Crest.
Yep.
Oh, well, Crest has a stock too.
Yeah, Colgate, all that good stuff.
Yeah, awesome. Okay, cool. So we know what stocks are. They're pieces of the company. What is an ETF?
An ETF is the term for it is exchange traded fund, ETF. It's basically an index, right? So a group of stocks lumped in one kind of portfolio, right? So the way I like to think of an ETF or an index is basically like when you go out to a restaurant, right? All these appetizers, think of them as a company. So they have the mozzarella sticks. Let's say that's Apple. They have, the sliders. Let's say that's Microsoft, right? Each individual one is a company, and then they always have the sampler, which comes with a little bit of everything. That's basically what an ETF is, right? And the good thing about an ETF is that it trades like a regular stock. So you could buy it whenever you want, when the market opens and closes. Unlike like a mutual fund, which is a little bit different, you have to buy at certain times. So you can't just like, oh, I'm gonna buy it right now. It's like,
So wait, what is a mutual fund? I did not know this, that you can only buy it during certain times.
Yeah, there's certain times, and there's like requirements también for some of them. Like, oh, you need at least 1,000 in order to get into this mutual fund. Yeah, so it just depends.
And does it trap your money for a certain amount of time? Or
No, I don't. You could still sell it, but again, there's like certain time frames when you can and can't.
Got it.
But I'm sorry, what was the question? I was going back to.
I was like, okay, mutual fund, ETF.
Oh yeah, so I mean, an ETF is technically like a mutual fund también, but it works a little bit different. It's a passive kind of fund, right? Because mutual funds are more active. That means there's a lot more management fees and things like that. So they're like buying stuff, selling stuff. So that could kind of hurt your performance. And then obviously every time there's anything that happens, they take a cut. So with ETFs, right, if you just invest in index funds, there's a lot less fees, which is called expense ratios, right? And there's a lot less management or activity as far as buying and selling.
So would you say ETFs are safer?
I'd say it's a lot simpler. I mean, any investment's always going to have certain risk, but it's a lot simpler and easier to grab. And if you just want to get started, an ETF is like the best way
Yeah,
to go.
and one thing that well, like you explained it years ago, it's sort of like, let's say you have a certain ETF, and in that sampler, you have Tesla, you have Apple, you have
Yeah.
Microsoft. Even if Apple tanks, like you still have these other
Yeah.
companies in there, so it's not really going to move your
Yeah.
ETF price a
Yeah, so
lot.
that's a good thing too that you mentioned that, because with the ETF, it's a good way to um, diversify your portfolio. So it's not like you're putting all your eggs in one basket. They're kind of like spreading it out. So if, let's say, you invest in this ETF, one that I like to recommend is VOO. That's the one that I first got started with.
I do too.
Yeah. So if that one, let's say a company goes out of business, right? If you had all your money into that particular company stock, you're out of your money. But if in that ETF, right, that exchange traded fund, if that company goes out of business, it just gets replaced with somebody else, and you still have all that, all those. You still have all that money invested in all those companies.
Question.
So it doesn't affect you.
ETF versus index fund.
An ETF is basically like an index fund, but an index, I mean, you can't technically invest in an index fund. It's just like a list of stocks. That's what an index is.
Okay.
Right. So an ETF is a fund that has like a bunch of those stocks within that index.
And that list is called an index fund.
Yeah.
Okay.
Yeah.
Cool.
So an index is basically just a list of stocks.
It's
so
your
there's
grocery
like
list.
Yeah. So like one is like the S&P 500 index, right? You can't like technically invest in that. There's funds that track all those and put them in one, and you can invest in it, which is like an ETF, right? But S&P 500, that's one of the biggest kind of indexes that the stock market tracks, and that's kind of like the benchmark. Basically, what it is the top 500 largest companies in the U.S.
Yeah, and
right?
then there's also another index fund, which is like the Nasdaq.
Yeah, there's NASDAQ. That's pretty much just all like technology companies. And then there's also the Dow Jones. So there's like a bunch of different indexes, but the one that I think everyone should get familiar with is the S&P 500, because that's like the baseline that everyone uses. Even 401ks, like they all track it to that. That's like their benchmark. That's what they're trying to beat. Mutual funds, all these hedge funds, they're all trying to beat the S&P 500.
Okay, cool. So we know stocks, we know what an ETF is, we know what the index fund is. If I wanted to get started, where would I start?
Yeah, so in order to get started, one, you're gonna need to look for like a brokerage account, right? Basically,
What is a brokerage account?
Yeah, it's
What is
basically
that?
an account that allows you to invest in stocks, right? So I think my personal favorite is Robinhood. I love that one.
So many people have
Yeah.
different feelings about Robinhood
Yeah, I think
because they would literally have said Robin the Hood.
yeah, but I think it's like the only reason they're robbing the hood is because, in my perspective, is like you're trying to make a quick buck, right? The fastest way to go broke is trying to get rich quick, and that's how they make their money, right? From trading, from people trying to do things. But if you're just leaving your money in there like a savings account, you're just having it, coasting. It's a different story, right? So I'm not worried about getting in, getting out. Oh shoot, the market goes up. Like I'm in it for the long run. You know, kind of touching base on generational wealth. I want to give it to my future kids once I have them, or maybe my siblings or whatever, and let it build, right? Because you get the most benefit from the stock market when you have your money invested over the long run, right? So, I mean,
So different brokerage accounts for anybody listening. Obviously, it's where you can invest. So you have Robinhood, which I agree, it's probably the simplest, it's the easiest, but then it also comes with the risk. And we saw it with AMC,
Yeah.
GameStop, where people try to sell, but they literally
There's too much
froze.
volume,
Yeah,
yeah.
it was too much. It was like super saturated. It's like when so many people try to go to a website, and it's like, well, so many people are trying to
crashes.
go, so it's crashing, and it's going to slow down, or it's just going to shut down.
Yeah.
And it did. It shut down, so people were pissed that they couldn't sell their investments. So hence why so many people recommend to have more than one brokerage account.
yeah.
Another one would be Charles Schwab, which I
Yeah.
also have as an
That's a good one.
emergency. Ameritrade,
Ameritrade, yeah. I think E-Trade, something like
E-Trade.
that. Fidelity.
Fidelity, yeah.
Vanguard's another good one. There's Webull. I mean, there's a bunch. Just find the one that you like. I like Robinhood just because it's like super simple, user friendly, looks neat, it's nice, right?
Yes,
So
and it's a great way to start learning about investing, because it literally gives you like a pretty graph and it puts everything in order. Okay, so we went over what a stock, an ETF, where you can get it. I have my $100. I want to invest them in a stock. We know which ones we should look for because we already said it. We should look at the things that you're buying.
Yeah.
What can these stocks provide me in value? Like they...
Yeah. So like from me, like the stock,
Or what do you look for?
yeah, like my goal with the stock, right? Like I'm big on dividends, and basically what a dividend is a cash payment from the company's profit, right? So some companies, they might pay you monthly, some of them might pay you quarterly, annually, whatever, but you're getting like physical cash, right? So that's basically like my investment, my retirement portfolio, right? So everything that I have into the stocks is mainly for dividends. You know, I want to invest in companies or ETFs that pay me a dividend. And with those dividends, I pretty much use that to buy things that I want, right? Like my dividends, they cover my phone bill. They might buy me a new pair of shoes if I want to, or I could just simply reinvest it. But like everything that I invest, it needs to have a goal. So for me, mainly dividends, I use that to either buy things that I want, and at the same time, the value of my stocks are still, you know, going up over the long run.
So they always say, make money work for you. You don't work for money. I think that is the end goal for so many of us. Dividend investing in stocks that provide dividends is definitely one way because, like you said, at the end of each month, quarter, years, you're getting some type of money that you can go ahead and use to buy things. What are some of your favorite dividends? And then I'll explain some of my favorite dividends.
I think one that I like that I get paid monthly is called SPHD. This one's like an index fund. And the thing that I like about it is that it's cheap, right? It's like $40 off the top of my head, $40 somewhere around there, right? Compared to like buying like Amazon. Amazon's like Amazon doesn't pay any dividends, but yeah, like some of these stocks, like they're pretty expensive. So I think for getting dividends and they pay out each month, it was like $40. I'm pretty sure somebody has $40.
Yeah. So you're listening to this. You're like, oh my God, I see some of these stocks that are $40. Some of these stocks like Amazon, Tesla that are in the 200s. I remember when I started investing and I asked you like where I should start. And even other people, they really recommended VOO.
Yeah.
Which you're just like, you see it as a recent investor. You're just like, VOO is now it's $400 something dollars.
Yeah.
When I first got into it 2 years ago, it was 300.
Yeah, like in the 300s.
Yeah. And so it's increased. And you're just like, what the hell? When am I going to even own one freaking share?
Yeah.
But there's a strategy called the dollar cost average.
Dollar cost averaging.
So what is the dollar cost averaging strategy?
So basically what that strategy is, you're just going to buy into a specific stock with whatever money that you have, right? So if you have $5, you're going to put $5 into it, but you're consistently putting that money into it. So as the value goes up, obviously you have more shares, you're going to be able to collect more dividends. And on top of that, the value of your money is going to be increasing, but you're just consistently putting money into that stock.
So it's a consistent, exchange for a piece of a stock.
Yeah.
So one thing that I like to do and one thing that I started to do, of course, it's been almost 3 years since I've invested in the stock market. Ever since I started, I was like, well, I don't have $300 to pay for this. So I did $1 a day, literally $1 on Robinhood, on VOO, and I automated it. We talked about automation and the benefits of automation in the last podcast episode. So I literally told my money what to do. Hey, every day you pull from my Wells Fargo account $1 and you put it into VOO. In a week, that's $5 in VOO. How many days? 352 days in a year, take out about 100 and something because of weekends. You doesn't invest in weekends, FYI. It's Monday through Friday. I was putting in about 200 and something dollars a year. So after 3 years, I can safely say like, I have 3 stocks in VOO and $1 didn't cost me anything, right?
Yeah.
But if we look at it in a quarterly perspective, VOO is giving you how much a quarter?
A quarter, dang, off the top of my head,
Like
as
a
far as
dollar
dividends,
or
honestly,
something?
I don't even check my dividends. Like they just come in. But I know they give you a certain amount. You're gonna pull it up right now.
Yeah, I'm gonna pull it up because I just so people can kind
But
of.
yeah, I think it is like a dollar.
They give about like $5 every single year, like
Yeah, that
on a
sounds about
year.
right.
So look, I have 3 shares right now, 3 shares of VOO, and it's still going $1 a day. And if I just go to dividends, my last dividend was at this. It was July 5th. That's the last time
Yeah,
I got paid a dividend. I had 2.87 shares at the time, and I got a total of $4.53.
yeah,
Four
yeah.
dollars and 53 cents. Now I'm obviously at 3 shares because every day a dollar has been
That's
going
good.
in, regardless if it goes up, regardless if it goes down. If it goes up, it's like, ah, shit, well, you're paying more for it. But when
Yeah,
it goes down,
paying less,
you're
and you could
paying
pick up
less. You're
more.
like, hell yeah, I know it's eventually going to go up because you've seen
Yeah. And the
that
good thing
swoosh.
about VOO, that one again, that one tracks that's a
S&P.
S&P 500, right, which tracks the top 500 largest companies in the US. Is that if you look at kind of like the chart from like 1926, the average annual return is about 10%, right, which is, pretty good, right? Where else can you get 10% return on your money, right?
Yeah.
But in order to really get those returns, you have to leave your money invested in it for a while, right? It's a long-term game,
Yeah.
right? We want money in the long run, not just real quick.
We say patience. So
Yeah.
PAY shunts instead of
Jeez.
patience. Like
Yeah.
patience will get you paid in the long run. We mentioned our favorite stocks, but these were favorite ETF
Yeah.
stocks,
If
right?
it comes, yeah.
What about stocks?
Stocks, individual stocks. Right now, I've been buying a lot of Kraft Heinz, right? So I like Kraft Heinz. They pay out a dividend. Another one is Pepsi. I love Pepsi, right? Because they own Frito Lay. So like,
And what is your mindset behind this? Like the psychology of it? Like
why am I
Pepsi?
buying
Why
them?
why Kraft Heinz?
Well, with Heinz, it's like one, they're everywhere, right? Ketchup, you always think of Kraft Heinz. Mustard, hot dog, all that stuff. Cheese. Whenever I have like a cookout, I mean, I always see it. Everyone's always grabbing the Kraft singles, right? So I'm like, oh shoot, okay, let me get that. Another one is Pepsi. Everyone loves hot Cheetos, right? So Frito Lay, hot Cheetos, Lay's, like all that stuff. They use it all the time. Whenever there's like a Super Bowl, right? Boom, they're buying that. A game night, whatever, good snacks. Everyone's buying that. So my mentality is like, shoot, everyone's buying that. I'm investing in that company. So every time someone buys hot Cheetos, right? Pepsi's profiting off that, and that profit is eventually going to come back into my pocket, right? So that's kind of like my mindset on why I pick those companies.
And these are companies that you can foresee not going out of business in the next 10 to
Yeah,
20 years.
yeah. I mean,
Right?
these are big companies that have been around for the long run, right? Like Coca-Cola, I don't see them going out of business. They're pretty mature companies. They're stable. They've been here through all the ups and downs, right? During COVID, during, like all these economic downturns or like, you know,
Yeah.
events. They're still here. Nothing has happened. Everyone's drinking them. They're evolving. They're getting better. And now a lot of them are pushing more healthy alternatives. So, hey, they're evolving. It's not like they're just staying the same and not innovating or anything. So,
Yeah. One of my favorite stocks would probably be, and it's funny because when I started investing, I literally was like, hey, yo, Eddie, let me see your portfolio list. And you
Yeah.
were kind enough to show me your portfolio list because you're not a gatekeeper of information. And I think I tried to mimic that when people ask me, like,
Yeah.
hey, what are you investing in? Well, I'm going to show you my portfolio. It doesn't
Yeah.
mean that you should trust everything that I said.
Yeah.
Because, again, it's personal finance, whatever
Yep.
you're comfortable with. But Energy Transfer is definitely
yeah.
ET. It was super cheap when I bought it. It was like $7. I think you bought it for
yeah,
like $4.
I bought it when it was at $6. Yeah.
Look at that. And then every day I did the dollar cost average, $1 a day. It was only like $7,
Yeah.
but it pays you a dividend.
Which is beautiful. How much is how many shares do you have with them?
I have about, you probably have a lot of
Yeah.
shares.
So like with this
Okay,
one,
I'll
Yeah.
start first because
And how much is your dividend también?
Okay, so right now the current price is 13.56. It is September 16th. Arriba México y la independencia, right?
Yeah.
So I have 274 shares.
Dang.
274
Yeah,
shares, right? So that is last time I received a dividend check from them, I
in
got
August.
$84.
Yeah.
$84. Like $84.
Yeah.
Some people make $84 in a day. Well,
Yeah.
well, no, nobody's making $10 an hour anymore. But part time,
They spend probably $84.
Yeah.
I'm pretty sure in one day.
yeah,
or
and
more.
you're just like, that's $84. All right, cool. You've been investing in this way longer.
Yeah, I bought this. I don't know when I bought it, but right now I have 623 shares, and the dividends are 31 cents. So I get paid
Every 3 months, right? Every 3 months.
every quarter. So I get paid $194.
$194. Imagine having every 3 months somebody just give you $194 and they're like, do whatever you want. And you're just
Yeah,
like,
that's like what around 750 a
a
year.
year.
And on top of that, the good thing is that if the company does well, obviously their goal is to increase those dividends, right? So they want to keep increasing it, right? It's not just going to be stable. Obviously, if they're kind of struggling, it'll be either, they'll keep it consistent or they'll cut it out completely. But the goal for a business is to grow, right? It's to make more profit and to give that money back into the shareholders.
Yeah, and I think that's a good segue into two ways to make money from stocks. And I'm going to just pivot a little bit because you said increase the dividend, because there's such a thing called dividend king stocks or the aristocrats dividends. That means these are companies that have been consistently increasing their dividends for the past 25, 50 years that they've seen like, hey, we're going to keep it steady. And then after a while, they'll increase it. Coca-Cola being one of them. Pepsi being one of them. I think another one of my favorite dividends, and it's a REIT, is Realty Income, which is I forget what
There's another one, I think.
Well, is it a REIT?
No, it's not a
EPR?
REIT.
I love EPR because so EPR is a REIT. That's a whole different conversation because REITs can be good and REITs can be bad. But basically, it's a company that buys and I don't even know, like the AMCs, they lease out the
they buy the
Cinemarks
movie theaters?
and experience stuff. Yeah.
So like they have events.
Like it could be theme parks.
Oh, that's pretty cool.
Yeah, so because I'm like, dude, movie theaters, even though AMC might be going down, Cinemark, they still lease out the spaces for all this entertainment stuff.
Yeah.
Right? So I'm like, you know what? And it's a REIT, which we can get into REITs on a whole other episode. Because I have some goods and some bad news about those. But okay, 2 ways to make money from stocks.
Yeah, so to keep it simple, there's 2 ways to make money in stock. One is when the value of that stock goes up, right? So you buy it for $10, let's say it goes up to 50. So that's capital appreciation. Again, that's one way. The second way is through dividends, right? So that's when a company pays you cash for the profit from the profit that they made. So those are the 2 ways to make money. My favorite is through dividends, right? Yeah. Just keep it simple. You have your money invested and you're just getting pretty much a check consistently.
And are you going to hold those dividends until that company
gets
to
so
zero?
my perspective of when I invest is like, I'm here for the long run, right? So I want to pass it down like to my future kids, maybe my brother, whatever happens, in the future, right? When we talk about that generational wealth, but I'm holding it forever. Right. Unless something crazy happens, like, they cut out their dividend and the company's going out of business, like I know, then I'll probably sell it. But for the most part, like I'm holding on to it. Yeah. Right. I want to keep getting that dividend check.
What do you look for in a business when you're buying the stock aside from the dividend? Because obviously there are some companies that are paying a good dividend, but you see the consistency like over the last 5 years or since they started that the price of the stock is still going down. So obviously there's a higher risk. Yeah.
So in that aspect, I typically start reading a little bit more, right? So I'll start like diving into the little bit more technical stuff. So like their financial statements, start looking at certain metrics, right? Which we could get into, on another episode, get into like the really nitty gritty, the details, like, how do you look at this or this? But the biggest thing is I read like what the news, what's going on. Like if a company's like, oh, they're going through a big lawsuit, or one of their products failed or something huge like that,
Somebody
I start
died.
there. Yeah, you never know, right? Or it could just be something like, oh, everyone's just scared about this, but in reality, it's like it's not going to impact the business over the long run. And it's like, oh, okay, and they pay a good dividend. So little things like that. But the main
Yeah.
thing is just reading.
Reading. Oh, for example, and obviously this company doesn't pay out a dividend, but news that always affects it for the most part is like Tesla.
Yeah, that's
Yeah.
a great example.
Yeah. So sometimes, like, hey, when electric car, because it's so new to people, and people obviously are investing into Tesla, which is giving it the capital to continue its projects. But at the same time, the minute like a car is released,
Yeah.
and like, hey, the battery exploded, or
Yeah.
it's been consistently exploded, it goes like, boom.
Yeah.
And people are like, oh, no, it's tanking. But those, I don't want to say smart people because it's a hit or miss. You just never know,
Yeah.
right? They're like buying the
They're
fear.
buying, yeah, they pick it up.
Yeah, they're buying the fear. And yeah.
Yeah. And then I think a good thing about that is like, if you look at Tesla, right, you're basically, when you invest in that stock, you're basically having Elon Musk, like the CEO of the company, basically run that company. Obviously, he's not going to let it go down. That dude's like genius. He's an innovator, all kinds of stuff. And
Something.
so you know what I mean? So you're basically investing in that company, and he's going to do all the work for you in order to make the company grow. He's not going to let it go down, right? And yeah, there might be like, oh, this is the next Tesla. But at the end of the day, there's only one Tesla. You know what I mean?
Yep.
So it's like you can't battle it. The next Tesla's already here. It's called Tesla. There is
Exactly.
not going to be another one.
All right. One last topic that I want to get into, because a thing people always hear is use other people's money to make money.
Leverage.
So with that, and I've tried to, I don't know, look at YouTube videos. I've tried to look at podcasts, and nobody talks about margin investing. It's a double-edged sword, yes.
It is.
So pay close attention. We're just going to do a brief overview. Again, personal finance.
Yeah. Margin investing, or just margin period when it comes to the stock market, it's a double-edged sword, right? So basically what you're doing, instead of selling your stocks, let's say you have 10,000 invested in the stock market and you want to put a down payment on a car. Instead of selling those $10,000, right, you could pull out what is called margin, a portion of it, let's say 5,000, and you have that cash, right? But on top of that, there's certain like requirements of how much money you need to have invested, but you can actually pull money out of your stock market portfolio without selling them and use that cash either to invest into more stocks, or you could use it outside, purchase something or whatever. But that's one of the beautiful things about having, growing your portfolio, and over the long run, it gives you more access to cash that you can use to invest.
So just a quick example. Margin investing versus like a credit card real quick. When you get charged interest rate on a credit card, it's between 19% to 21%. So that means for every $100 that you have, the credit card's going to charge you on a yearly basis, $19 to $21. You're just like, whoa, on a yearly basis. Versus like margin, it's lower. Obviously right now, because of the way interest rates are at the current moment, it's around 8%, like on Robinhood. On other ones, it's a little bit higher.
Yeah, it just depends on the brokerage.
Yeah, it just depends on the brokerage. But so going back to your analogy of $10,000, if you grab a whole $10,000, which I don't know if it'll allow you to grab the full 10,000 if you only have 10,000.
Yeah, no, it won't.
It won't.
I was just saying,
right?
yeah, there's certain requirements that you can take up to, right? Because there's like a margin requirement, like, hey, you need to have this dollar amount invested. I don't know the exact percentage, but like mine, I have like about, I want to say like 30% of my portfolio as far as margin. I could do whatever I want with that, but you only get charged interest on the money that you pull, which is the beautiful thing about it.
Yeah. And then one thing that you want to try to avoid, that's why, again, read more on margin and investing, because if not, you're going to get what is called a margin call.
Yeah.
That means...
That's basically when your portfolio or the money that you have invested drops below the amount that they ask for you to keep invested, right? So let's say that $10,000, let's say the margin requirement is like, hey, you need to have at least 5,000 invested. If it drops below that, right, the market tanks, there's going to be a margin call and they're going to sell your shares, and that's what we don't want.
Yeah, they sell them without even telling you, because
Yeah.
they're obviously, I think that's the double-edged sword.
Yeah.
That's why you want to have as more money invested
Yep.
and pull only a little bit of margin. And get this is how so many millionaires avoid paying taxes, because
Yeah.
you're just like, wait.
Yep.
You hear like Trump, you hear Warren Buffett, and you're like, what the fuck? They're not paying taxes, but they're making millions?
Yeah.
Well, guess what? The margin money that you pull out is tax-free, because at the end of the day, it's a loan.
Yep.
You're getting a loan from your own
investments.
investments.
And then you could itemize. If you itemize on your taxes, you could actually write off the interest that you pay.
Yeah.
too.
Obviously, you're going to have to be playing with bigger amounts of money, because itemization, and again, we'll talk about taxes.
That's another.
The standard deduction is what right now, 12,000 or 13,000?
12, I think it's 12,500 off the top of my head.
So you'd have to be paying more more than 12,500
Yeah.
in interest to actually itemize that. But once you're playing with big bucks,
Yeah, it's a different ball game.
yeah.
Right. So I mean, again, like in real estate, leverage is huge, right? So they use that, like they refinance. People will refinance their home, pull money out, and then buy another home. So use other people's money. It's a big tool, but at the same time, it's like you have to have that mindset and that like emotional kind of control, because it is risky, and it's a different ball game, right?
But once you start leveraging, you're just like, because for example, like I did 2,000 in leverage, where you're just like, oh my god,
on Robinhood, huh?
on Robinhood,
and they give you 1,000 for free.
They give you 1,000, so technically I'm only being charged $1,000, so it's sort of like a credit card. But the beauty of it is, you can. We were talking about dividends. Every time you receive dividends, it's paying that margin.
Yeah.
So you're just like, well, I'm already getting paid without doing anything, and it's just gonna keep going down.
Yeah.
If I wanted to, I could have used those $2,000 to pay something pay more, buy more stocks.
Yep.
But instead, I use those $2,000 to put it more on my car payment, because I'm paying it faster.
Yeah.
And at the end of the day, I don't have to be putting money to pay off the margin that I pulled out, because my own dividends are gonna pay for it.
Yeah.
Now
that's what I do too.
Yeah. Now imagine all these people, millionaires, who have so much money and are pulling out $50,000.
Yep.
And then because they're making, I don't know, $2,000 in dividends, it's like it'll eventually pay itself out. And if I get interest, guess what? I don't care, because it's a write-off.
Yeah.
And you're just like, what the fuck? These motherfuckers are playing the big ball game.
They use credit. A lot of it's credit, again, leverage, right? That's a completely different ball game, right? Once you start getting into there, but there's higher risk, but at the same time, there's also bigger reward. Yeah.
All right, y'all. So again, I think this episode we saw more passion, because we're getting into nitty gritty. The psychology of money is, getting you the mindset, and that's episode 1. This is episode 2. These master classes on investing and finance. But Eddie, thank you.
I appreciate it.
Is there anything else that you missed?
No, I think that's pretty much it, bro.
If you want more information, you can go ahead and, let me know on my Instagram. Make sure to check out the other episodes that we have here. Where can people find you?
It says no space.
Damn it. No space. Well, that means you're not seeing him, but you're seeing me. Eddie, come over here. All right. So where can people find you?
So all social media platforms, just go to Eddie the Hustler. Reach out to me, any questions that you have, I'll respond. And then like Jose said, if you want to see my portfolio, if you have any questions, feel free to reach out. I'll show you. Like, I'm not gatekeeping, right?
Same. Super same. All right, y'all. Till next episode.
All right.